Infinite banking and the tax-free cash growth warehouse is the best way to grow, protect, and multiply the power of money. Rather bold claim, isn't it? And you may think it's subjective rather than an absolute truth. One may conclude that it is the case simply on the basis that so few people practice the strategy or even know about it. On the other hand, for the same reason, the strategies are so little known, one may argue that it really is the best way to grow, protect, and multiply the power of money. And the reason is it is so little known is because it has been kept secret by those in the know. And I aim to clear up this question right here and now. Aloha, I'm Stan Cox, Principal Broker and Strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy. And I'm the managing director of the Hawaii Financial Free Thinkers Academy, a nonprofit financial literacy education organization. For the past several years, I have focused on and specialized in the infinite banking concept and developing the tax-free cash growth warehouse finance strategy. So if you find this to be helpful, please like this video and subscribe to this channel and share it with your family and friends. Also, please post your questions and comments here. First, why is infinite banking and the tax-free cash growth warehouse the best way to grow money? Certainly, there are arguments in favor of investing in stocks and bonds. And to be sure, there are examples of people who have made fabulous gains in the stock market and continue to do so. In reality, though, the big successes for investors in the stock market are a small minority, and far more people who invest in the markets lose more than they gain. According to Forbes Advisor dated April 2024, 80% of active traders in the stock market lose money rather than gain. In the world of financial advisors, mutual funds, government bonds are generally considered to be the safest and surest way to grow wealth over the long term. But the truth is, they are neither safe nor sure. Mutual funds are collections of stocks, each of which are subject to loss as well as gains. Municipal and government bonds, while somewhat safer than most stocks, still are not guaranteed because the money raised by the bonds is invested in government projects. Those projects are subject to cost overruns and even failure, which result in losses. In any case, bonds typically have a very low rate of return, which is not guaranteed, and your money is tied up for the duration of the bond. Bottom line is stocks, mutual funds, and bonds are not guaranteed to return any gains. Now, I don't know about you, but I want my money to be safe and guaranteed, not subject to loss. And I want to be able to access my money whenever I want to. I don't want it held hostage while someone else is using it. IRAs and other retirement accounts are largely invested in stocks and funds. So they're essentially the same as opening a managed investment account. Certificates of deposit are guaranteed, but the return on them is dismally low while your money is locked up away from you, while the bank happily lends it out to others at a much higher rate than you will ever earn on it. What about real estate? Real estate is actually a really good long-term investment in most cases. Not guaranteed, but in most cases, over time, real estate grows in value, and you can access the value via home equity lines of credit. But unless you pay cash for the real estate, you'll be backwards on the value for many years due to the high cost of the amortized loan for its purchase. Then, of course, to access the value by means of credit lines, you'll have to pay interest at a rate and repayment schedule determined by the bank. And real estate is not exempt from loss of value either. Fortunately, that doesn't happen often, but it does happen. So again, not the safest, not a guaranteed way to grow money. Now, with infinite banking, your money is guaranteed to grow at a set minimum rate and with dividends on top of the guaranteed rate. Safe and guaranteed high compounding dividend interest. In my book, that's way better than anything else, and it does not carry the risk of loss. And everything else does carry a risk of loss. What about protecting your money? It's interesting that banks actually carry insurance to protect money that is deposited with them. It's called FDIC, which stands for Federal Deposit Insurance Corporation. So banks buy insurance from an insurance provider to protect your money. But the maximum that can be insured is $250,000 per depositor, not per account. So that means even if you have 2 or 3 accounts in the same bank with $250,000 in each of those accounts, only a total of $250,000 of your total $750,000 of deposits is protected. In contrast, insurance providers do not have insurance on the money that they hold from their accounts. Why? Because they are self-insured by means of the liquid cash they are required by law to have in reserve. Specifically, insurance companies are required to have 2.25 times the amount they have promised in benefits held in liquid cash reserves, whereas banks are allowed to lend out 10 times more than the amount of liquid cash they hold. It's called fractional reserve banking. If any private citizen were to try that, they could go to jail for fraud. So the reality is, while banks are meant to present the image of strength and safety, they really are anything but. And as previously explained, stocks, bonds, and even real estate are a gamble. On the other hand, insurance companies, especially the big mutual companies that provide the best accounts for the infinite banking and tax-free cash growth warehouse strategy, not only are among the strongest and safest corporations in the world, they provide the best protection, not only for the money that you put into your account to use with the infinite banking tax-free cash growth warehouse strategy, but also for the money that you want to provide as a legacy for your loved ones in the future. There really is nothing that compares. Now, as for multiplying the power of your money, this is where the infinite banking tax-free cash growth warehouse really shines. There is nothing else like it. These tax-free cash growth warehouse accounts are unique in that they will continue to pay high compounding dividend interest on your cash value account, even when you have all the money leveraged with policy loans. In some cases, with the less optimized companies, the interest charged on the policy loans is equal to or greater than the dividend interest being paid to the cash account being leveraged. With the right company that is optimized, you will be earning greater dividend interest than the interest that is being charged for the policy loans. On top of that, the interest charged for the loans is simple interest, while the dividend interest being paid to your account is compounding. So even if the interest charged is equal to the interest being paid to your account, you'll actually come out ahead in money earned. There really is no other account that does that. But even if there were, the thing is with these tax-free cash growth warehouse accounts, when you leverage your cash with loans, you determine when or even if you will make repayments on the loans and in what amounts. You take a loan anywhere else and the lender determines when, how often, and how much you must pay back on the loans. And here's the kicker. If you should so desire, you can leverage your tax-free cash growth warehouse account for money to invest in stocks, mutual funds, bonds, real estate, whatever, without interrupting the guaranteed safe growth of your money in your account. And I have several clients who do exactly that with great success, I might add, especially those who do real estate fix and flips. But there's also the great advantage for business owners who buy inventory in advance and then sell it for profit by paying in full up front for the inventory by leveraging their tax-free cash growth warehouse. They typically save 3% or more overpaying for the inventory on a net 30, 60, or 90 days. And of course, the more mundane, if even more personally satisfying, there's leveraging your tax-free cash growth warehouse to buy things for yourself, for family, such as vacation or furniture or cars or paying off comparably high interest credit cards or other debts, while at the same time, your money in your tax-free cash growth warehouse continues to earn that wonderfully high compounding tax-free dividend interest. Amanda and I have done all those things with our accounts. So there you have it, my friend. Infinite banking and the tax-free cash growth warehouse is, without a doubt, the best way to grow, protect, and multiply the power of your money. Please like this video and subscribe to this channel and post your questions and comments here. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. If you'd like to book a free phone consultation with me, the link to my Calendly page is also below. And if you'd like to apply to become a client of ours, that link to the application is also below. We're here to help. We look forward to helping you. Aloha and mahalo for watching.